Greetings, fellow investors. Welcome back to the Finance Healthy Luxuries Channel, your source for investment insights that align with a life of opulence. Today, we're diving into the world of exchange-traded funds, known as ETFs, with a spotlight on Vanguard. Vanguard, a behemoth in the investment world, is known for its low-cost, diversified offerings that have become a staple in the portfolios of many savvy investors. In 2023, 5 Vanguard ETFs are leading the pack, offering investors a blend of growth potential and stability. These include the Vanguard Total Stock Market ETF, Vanguard S&P 500 ETF, Vanguard Dividend Appreciation ETF, Vanguard Total Bond Market ETF, and the Vanguard Information Technology ETF. Each of these ETFs brings a unique value proposition to the table, catering to different investment goals and risk appetites. So, without further ado, let's dive in and unveil the top 5 best Vanguard ETFs for the year 2023. Our first contender is the Vanguard Total Stock Market ETF, ticker symbol VTI. As its name suggests, VTI is the epitome of diversity in the world of ETFs. It's an all-encompassing fund that provides investors with exposure to the entire U.S. stock market. This includes a vast array of small, mid, and large cap companies across many sectors. Think of it as a thorough representation of the U.S. economy at your fingertips. It's like having a small stake in every publicly traded company in the United States, all bundled into one single investment. This kind of broad exposure is what makes VTI so appealing to a wide range of investors. Yet, as with any investment, it's important to understand that there are potential risks involved. The performance of VTI is directly tied to the performance of the overall stock market. This means that when the market is doing well, VTI tends to do well. However, during market downturns, VTI could also take a hit. This is why it's crucial to consider your risk tolerance and investment horizon before diving into this ETF. But here's the catch. Despite these risks, VTI has a strong track record of performance. It has consistently provided positive returns over the long term, making it a reliable choice for those looking to grow their wealth steadily over time. Additionally, VTI's low expense ratio is another compelling factor. Vanguard is known for its low-cost funds, and VTI is no exception. This means more of your money goes towards your investment, not towards paying fund management fees. Moreover, VTI offers the liquidity of a stock, meaning you can buy and sell shares throughout the trading day at market price. This flexibility, combined with its broad market exposure and low costs, makes VTI a popular choice among both novice and experienced investors. In conclusion, VTI provides a comprehensive snapshot of the U.S. stock market, offering the potential for growth and diversification in a single investment. Whether you're a seasoned investor or just starting out, VTI makes a cornerstone for diversified long-term portfolios. Next up, we have the Vanguard S&P 500 ETF, symbol VOO. This ETF is designed to track the performance of the Standard & Poor's 500 index, a widely recognized benchmark of U.S. stock market performance that is dominated by the market's leading companies. Now, why should we consider VOO as part of our portfolio? Well, the beauty of VOO lies in its simplicity. When you invest in VOO, you're essentially buying a tiny piece of the 500 largest publicly traded companies in the United States. This includes the likes of Apple, Amazon, Microsoft, and many others that have been instrumental in shaping the modern business landscape. VOO is a passive ETF, meaning it aims to mimic the performance of the S&P 500 rather than trying to outperform it. This results in lower management fees, making VOO a cost-effective way to invest in the broad U.S. stock market. But like any other investment, VOO comes with its own set of risks. The ETF's performance is heavily tied to the health of the U.S. economy and is subject to the volatility of the market. Therefore, while periods of economic growth could see your investment in VOO rise, downturns could also lead to potential losses. However, the historical performance of the S&P 500 has shown steady growth over the long term. This makes VOO a popular choice for those looking to build a core portfolio with a long-term perspective. It's a straightforward, low-cost way to gain exposure to the U.S. equities market, making it a strong contender for any diversified investment portfolio. In essence, the Vanguard S&P 500 ETF, or VOO, offers investors a slice of some of the largest and most influential companies in the U.S. It's a simple, cost-efficient way to tap into the growth potential of these market giants while also spreading the risk across a wide array of sectors. So, if you're looking to invest in the broad U.S. market, VOO might just be the ETF you've been searching for. Moving on to dividend growth, we'll explore the Vanguard Dividend Appreciation ETF, known by its ticker symbol, VG. This ETF is unique in its focus on companies that have a consistent history of increasing their dividends. Now, why is that important, you ask? Well, companies that consistently raise their dividends are typically financially stable and generate consistent cash flows. These are the types of companies that can weather economic downturns and still pay their shareholders. They're the stalwarts, the dependable players in the market, and VG offers investors a way to tap into these companies in a diversified manner. VG is composed of a broad array of companies from various sectors. It's not just about the big names in tech or consumer goods. Instead, VG seeks out companies across the market spectrum that have proven their ability to grow dividends. This wide sector diversification can help buffer against market volatility and sector-specific downturns. But like any investment, VG comes with its own set of risks. The primary risk is associated with its focus on dividend growth. If a company's dividends don't increase as expected, or worse, if they decrease, it could negatively impact the ETF's performance. In addition, while VG's focus on dividend growers can provide a level of stability, it may not capture the high growth potential of certain non-dividend paying sectors. However, it's important to remember that VG is not about chasing the highest dividend yield. Instead, it's about the long-term appreciation potential of companies that have a track record of increasing their dividends. So while the yield might not be the highest on the block, the potential for steady long-term growth can make VG a compelling addition to many portfolios. In a nutshell, the Vanguard Dividend Appreciation ETF, VG, is a potential income-generating powerhouse. It offers a diversified approach to investing in companies with a proven history of dividend growth, providing a measure of stability in a sometimes chaotic market. But as always, it's critical to understand the risks involved and to consider how it fits into your overall investment strategy. Scene script: fixed income is crucial for a well-rounded portfolio. We'll delve into the Vanguard Total Bond Market ETF, BND. As we navigate the dynamic landscape of investment, one must not overlook the significance of fixed income securities. One such instrument that provides a solid foundation to your portfolio is the Vanguard Total Bond Market ETF, fondly known by its ticker symbol BND. Why is BND so important? You see, BND is like the Rock of Gibraltar in your investment portfolio. It provides stability in times of market volatility, acting as a counterbalance to the more aggressive equity investments. BND gives you exposure to a wide array of U.S. investment-grade bonds, which includes government bonds, corporate bonds, and mortgage-backed securities. This diversification helps in spreading risk and reducing the potential for massive losses. Now let's talk returns. BND, like any other bond fund, offers two types of returns. First, you have the yield or the interest that these bonds pay. Second, there's a potential for capital appreciation if bond prices go up. So in a sense, BND offers a dual benefit of income and potential growth. However, it's important to understand that bond prices and interest rates have an inverse relationship. When interest rates go up, bond prices usually go down, and vice versa. So, while BND offers stability, it's not entirely free of risks. But the good news is, these risks are generally lower compared to equity investments. Moreover, BND has a low expense ratio, which means more of your money goes into investment rather than paying fees. This cost-effectiveness is a trademark of Vanguard ETFs, making them a favorite among investors. In a nutshell, BND is like the defensive line in your investment football team, protecting your portfolio from market volatility and providing a steady stream of income. It's a great choice for conservative investors or those nearing retirement who prioritize capital preservation over high returns. BND can act as a stabilizing force in your portfolio. So if you're looking to build a robust and diversified investment portfolio, consider adding a dash of BND to it. It might just be the ingredient you need for your recipe of financial success. Lastly, we turn our attention to the tech sector with the Vanguard Information Technology ETF, VGT. This ETF is a marvel, not only because of its focus on the rapidly evolving tech industry, but also because it offers investors the chance to ride the wave of technological advancement. The tech sector is a hotbed of innovation, with companies continuously pushing the boundaries of what's possible. From cloud computing to artificial intelligence, from cybersecurity to quantum computing, the technology sector is reshaping our world at a blistering pace. Now let's talk about VGT. This ETF offers exposure to some of the biggest and most influential tech companies, the ones that are leading the charge in this digital revolution. We're talking about tech titans like Apple, Microsoft, and Alphabet, companies that have proven their ability to innovate and dominate their respective markets. Investing in VGT allows you to tap into the potential of these tech giants and more. It's a broad-based ETF that covers the entire tech sector, spanning industries such as software, hardware, IT services, and semiconductors. This diversity is a strength, providing a buffer against volatility in any single industry within the tech sector. But like any investment, VGT comes with its own set of risks. The tech sector is known for its volatility, with stocks often swinging wildly based on the latest news or earnings report. Additionally, tech companies often trade at high valuations, leaving them vulnerable to sharp declines if they fail to live up to lofty expectations. Despite these risks, many investors find the potential rewards of investing in the tech sector too enticing to resist. As we move further into the digital age, technology companies are only likely to grow more influential. In conclusion, VGT is an attractive option for investors who believe in the power of technology and want to capture the growth potential of the tech giants. It's a chance to invest in the companies that are shaping our digital future and potentially reap the rewards of their success. VGT captures the growth potential of the tech giants that shape our digital future. In conclusion, these 5 Vanguard ETFs offer investors a diversified toolkit for navigating the markets in 2023 and beyond. The Vanguard Total Stock Market ETF offers an all-in-one investment solution, providing exposure to the entire U.S. stock market. The Vanguard S&P 500 ETF mirrors the performance of the iconic S&P 500, offering a slice of the largest and most influential companies. The Vanguard Dividend Appreciation ETF focuses on companies with a history of increasing dividends, making it an income-generating powerhouse. The Vanguard Total Bond Market ETF acts as a stabilizing force in a well-rounded portfolio, offering exposure to a broad range of bonds. And lastly, the Vanguard Information Technology ETF captures the growth potential of the tech giants shaping our digital future. Thank you for joining us on this exploration of the top 5 best Vanguard ETFs in 2023. Don't forget to give this video a thumbs up, share it with your fellow investors, and subscribe to the Finance Healthy Luxuries channel for more investment insights at the intersection of finance, health, and opulence.